Hosted in conjunction with Chris Media, the CEO interview series allows investors to hear directly from the CEOs leading the companies featured on Wholesale Investor. Enjoy the interview and reach out via the details in the description.
Hi, and welcome to another CEO interview. Today, I'm joined by the CEO of XCEDA Capital, Daniel McGrath. Thank you for joining me, Daniel.
Pleasure, Rhythm.
Brilliant. Now, Daniel, just to begin with, can you give our audience members a high-level overview of XCEDA Capital?
Sure, Rhythm. So XCEDA Capital is a business that operates in both New Zealand and Australia. In New Zealand, we're an authorised deposit-taking institution licensed by the Reserve Bank. We've been operating for over 30 years. So what that means is we act like a small bank. We take retail deposits from the public and we deploy those funds into our lending products. And our lending products in New Zealand are covering personal loans, small business loans, and mortgage lending. And in Australia, we launched the Australian business in March 2020. And we are a non-bank lender in Australia. So we have a wholesale Australian financial services license to manage investment schemes. And we run a lending strategy, and we also have a property funds management strategy. And so with regards to the experience that we've had, we're only a new company in Australia for the last 3 years, although we have vast experience both in New Zealand and also through our directors in Australia who've been operating in the Australian market for well over 40 years.
Amazing. Sounds good. Thank you for telling us about that. Now, let us talk about the origin story of XCEDA Capital. So can you tell us from inception, what was the motivation behind starting this fund? And if you could also list some key problems that you came across that spurred the motivation behind starting the fund.
Sure. So as I mentioned, the main part of our business of XCEDA up until March 2020 was the New Zealand business, and we decided to come across the ditch and start our wholesale fund in Australia in March 2020. It was obviously a difficult time prior to COVID, or right on the cusp of COVID, to start an investment fund. But we wanted to start the fund using the same principles that we've invested for over 30 years in New Zealand, and that's around mortgage and asset-backed lending. So one of the significant difficulties around that time was starting a wholesale fund, talking to investors during the COVID period. But certainly since that time, what we've found is investors like the asset-backed nature of our mortgage-backed lending, and certainly the returns that we're able to provide. And so what we've done is we've launched the XCEDA Mortgage Income Fund this year. And the Mortgage Income Fund, as the name would suggest, it invests into loans backed by mortgages, and those mortgages are residential mortgages. So we're not an investment fund that focuses on development or construction funding. We focus on residential properties, and we focus on the as-is valuation of those residential properties when we invest in them. And so the returns that we're able to achieve on that type of lending are, in the 9 to 12% mark. And the reason for that is we're a bridge or short-term mortgage funder. So what we do is we provide investors with the ability to whether it be purchase a property or release equity in a property, and we do so for the commercial market. So none of our borrowers of our mortgage income fund are classified under the national credit code, so they're not consumer lenders or retail borrowers, I should say. They're all investors, and so on that basis, we're able to provide a short-term or bridging mortgage product that offers a speed and flexibility in the type of lending we can provide that is attractive to those borrowers. And then on the other side of the balance sheet, which is obviously for our investors, we're able to pass on those higher single-digit returns to our investors. So as I mentioned, the mortgage-backed nature of our lending is very attractive to investors, particularly in a volatile market.
Amazing. That absolutely makes perfect sense. Now, let us talk about the discerning principles at XCEDA Capital. So you've touched upon this, and especially with the mortgage income fund that you've launched, you've also listed out, the uniqueness of the product. But anything else, if you would like to add to that, because my next question was around the unique investment methodology of the fund, but anything else you want our audience members to know about?
Look, I think the principles are fairly well understood in terms of our investment strategy rhythm. So we are, as I said, an income-based fund. So our investors can elect to invest with us over a period of either 12 months, 24 months, or 36 months. So 1, 2, or 3 years. They can elect to have their income paid monthly or quarterly. And as I mentioned, the target return is 9%. So those types of parameters or investment strategy is fairly well understood. And many of our investors who might otherwise have some of their investments in either equities or startup ventures, some of them quite like to have an allocation to a fund such as ours, where they can get that solid amount of income yielding return on a fairly well risk adjusted basis. So that's basically the nature of the investments. But in terms of where we operate, we focus on the eastern seaboard of Australia. So we're based in Brisbane. We focus a lot on the Queensland market, obviously, but also we do provide mortgage lending into the New South Wales, ACT, and to a lesser degree, but we still do cover the Victorian market as well. So we're very much focused on the eastern seaboard. It's areas that we know, and it's areas where we know there will be good liquidity in terms of the underlying loan and underlying asset. So they're the basic parameters of our fund. And as I said earlier, in terms of the track record of our investing, even though we are a young business in Australia, we do rely on the operations and expertise of our Reserve Bank licensed entity in New Zealand. But I would also add, in terms of the experience of our Brisbane-based team, both of my co-directors in Brisbane office were the founders of Cromwell Property Group, which is a very successful listed property trust. And so the combination of, as I say, even though it's a new business in Australia and a new fund, it's the combination of our expertise both in Australia and New Zealand, where we talk to investors about how they can get confident around our track record, overlaying what is essentially a fairly well understood investment product, which is obviously mortgage-backed lending.
Brilliant. Now, my next question, Daniel, is actually centered around your team. So obviously, I know that our audience members would love to know more about what skill set does your team bring to the table, and if you could also highlight why would they feel comfortable in the hands of your team, coming on board for the fund.
Sure. So just in terms of myself, actually, to start with, so I'm the CEO of the group. So I cover the operations in both Australia and New Zealand. My background was a commercial lawyer, working both in Australia and overseas, in London and in Asia. I also worked with the Challenger Financial Group formerly as well, which had many managed and listed funds. So in terms of the other leadership team, as I mentioned, we've got 2 directors in Brisbane that are vastly experienced in the property funds management area, particularly around the governance and trusteeship of our funds, which is obviously very important to our investors. In terms of the broader team, we have a very well-experienced skill set around loan originations. In our loan originations part of the business, we rely heavily on the broker distribution market. We have a small, I guess you could call B2C market, where we do have a network of direct borrowers, but largely our distribution is through the mortgage broker market across the eastern seaboard. And we have BDMs that work on that distribution in order for us to be able to deploy the funds that we have. And then broadly into the operations part of the business, we have very experienced compliance and documentation teams. We're very focused on the regulatory nature of our business, which covers all of the requirements around AML, CFT, which is obviously very important in this market. And I would say finally, we also do lean on the expertise of our New Zealand team. We have a 12-person operations team in New Zealand that has been servicing that business for 30 years. And so the stringent requirements that the XCEDA in New Zealand has to undertake in relation to its Reserve Bank license, the Reserve Bank of New Zealand, that is, we're able to draw on that operational expertise in the investment side of our business in Australia with the XCEDA Mortgage Income Fund, but also in terms of the deployment of those loans and the ongoing management of those loans.
Amazing. Now, as a parting question, Daniel, and this is for the prospective investors in the audience. So what does the strategic outlook look like, let's say, over the medium term? So what milestones are you looking to achieve that, investors should be excited to see with XCEDA?
Yeah, so in terms of the fund, as mentioned, Rhythm, we only launched the fund this year. So we're looking to achieve a target of reaching 25 million in the fund over the next 12 months. I would point out that this fund is a senior secured fund. So all investors in this fund are ranking together in a pooled basis, on a first ranking basis. So to achieve that without any leverage in the fund, which we don't foresee applying, then that is a realistic target for us, but also a strong target in terms of the growth of our business. In terms of the lending side, as mentioned, we're still going to focus on those areas on the eastern seaboard. What we also are very focused on in this current market where we're seeing a downturn in the property valuations, I think it's important for us to recognise that investors are concerned about that with mortgage-backed securities. We see the way in which we invest, as I mentioned, only on as-is valuation. So we don't do property development loans, or we don't do construction loans. And I think that's an important point to make about this fund in this market. And we also adopt fairly conservative LVR. So the majority of our portfolio sits at around 60% LVR. And so we see that as a strong position to go forward over the next 12 months, because it will be an interesting 12 months, particularly around property circles. But as I mentioned earlier, we say to investors, look, you don't have to have all your investment in our fund or our funds. You know, we believe that we play a part in a well-balanced fund, particularly around our monthly or quarterly yield distributions, and we are offering and are able to achieve a high single-digit return. So for us, for the next 12 months, Rhythm, it's about building more track record in our fund, getting past that initial hurdle of 25 million, and providing those investors that come in at the moment with those target returns, and operating in a way in which we can be completely transparent with them and provide them with assistance about anything they need in relation to their investment portfolio.
Amazing. Well, Daniel, it sounds like everything is aligning in terms of, you have launched the fund, you have the track record, and also a very strong team backing you. Well, I wish you all the luck with your venture. For anyone who's interested to get in touch with the team at XCEDA Capital, please see the details at the side of the screen. You've heard it all from the CEO himself about how great an investment opportunity this is. So feel free to reach out. Thank you again, Daniel, for joining me for this interview.
Thanks very much, Rhythm. Appreciate it.
Thank you.